This year in China, there has been a literal war for electric car market share. This is the world's biggest electric car market by a mile. And this is what is happening in China right now. Hello, my friends. Welcome to the channel. I'm the Electric Viking. Thank you for tuning in. If you're new to the channel, we've done more than 2,900 videos, many of those about the Chinese car market, about EVs in China, about what is happening over there. And it is very, very important. Make no mistake. It affects the world in a much greater way than any other country's car market. In China, there are gasoline-powered vehicle makers. I mean, realistically, to be fair, every single automaker that you know of, or that the average person knows of, Toyota, Honda, Mitsubishi, etc., they're not EV makers. I mean, only a few % of their sales in China are EVs. So we're not even going to talk about them because their market share is going down. It's contracting. Chinese brands and Tesla are taking that market share. It's going to be even worse for those brands as of July this year because that's when emissions targets changed. There'll be similar rules to Euro 7, not Euro 7 itself, but similar rules implemented in China. Now, the Chinese president basically has said, we realize, yeah, you're all screwed. Talking about automakers from Japan, America, and Europe, you're all screwed. Actually, we'll be a bit leaning on you for a few months. We don't know how that's going to play out because right now there's more than 4 million cars are sitting at dealerships, most of which can't be sold. That could change, but clearly that will affect the EV market because a lot of these cars are being dumped. They're being dumped at way below their cost price in China. In addition to that, there's more than 80 electric car manufacturers in China, all fighting for market share and all willing to sell at a loss to get that market share. The only car makers that are making a profit in China are BYD and Tesla. Speaking of Tesla, Tesla sales, according to the experts that I've spoken to personally and read, they've said Tesla are going to lose in China this year. They're going to be crushed like a snail when you walk through the garden and it just gets crushed under your shoe. Yeah, that hasn't happened. Tesla has sold around about 70,000 cars in China in March. We don't have the official numbers yet, but it's approximately 70,000. What about the competition? BYD. The majority of BYD's cars that they sell, in fact, more than 95% of the vehicles they sold last year were sold in China. It's probably about 90% now. Doesn't matter. BYD has sold around about 200,000 vehicles in China. Now, BYD actually sold 151,000 electric vehicles, including plug-in hybrids, in January, and 194,000 in February. February's the worst month of the year for vehicle sales in China by a mile, so that number for BYD was absolutely incredible. That combined 2-month total of 345,000 vehicles increased 90% year over year. In other words, BYD sales are up 90%. In fact, more than 90% year over year so far. An 80% increase for the first quarter suggests BYD sold roughly 515,400 vehicles during this period, or around 170,000 vehicles in March. But I believe that number is actually closer to 200,000. We will very soon find out. Now, to give you some context, BYD sold 285,000 vehicles in the first quarter of last year. They have nearly doubled sales for the first quarter of this year. They are now clearly neck and neck in a very tight race with Tesla for fully electric car sales, for getting that crown worldwide. Less than a week ago, BYD posted its earnings for the fourth quarter and full year 2022. Its earnings were up an incredible 400% versus the same quarter in 2021. I'm talking fourth quarter of 2022. They actually made nearly $2 billion in profit, which was an incredible achievement for BYD. The Financial Times said Tuesday that Tesla's move to slash prices in China had backfired as it lost share to BYD. In January and February, BYD's share of EV sales grew to more than 40% from 34% last year, while Tesla's fell slightly to 7.8%. Now, obviously, that's the Financial Times trying to get you to read. Keep reading. We'll tell you about all the terrible things going on in the world. Unfortunately, the Financial Times is just lying. You would think that a paper like that would have some credibility. They don't. Basically, Tesla, what their strategy is to sell EVs outside of China, generally for the first couple of months of the quarter. Then the third quarter, they'll sell within China. I don't think Tesla's market share has changed at all in China in the first quarter of this year. Has the move backfired? for Tesla in China? Absolutely not. Tesla had no choice. Everyone was reducing their prices. Tesla did the same thing, and it's managed to maintain market share and still maintain very, very good sales in China. So it hasn't backfired at all. Now, very soon, BYD will begin selling the Seagull. It's believed to be the first EV in the world to be mass sold with a sodium-ion battery, and that will happen within a couple of months. However, the BYD Seagull will go on sale for around $10,000 at its base price within the next couple of weeks. Now, BYD stock, which trades over the counter, rose 0.5% to $29.40. It's up 10% for the week, so I'm glad I've still held on to my BYD shares. And shares have actually increased so far this year by 19.7% after decreasing in 2022 by 27.7%. What about the other manufacturers? How are they going? NIO delivered 10,378 EVs in March. Its sales are, well, a bit disappointing in Europe. Everyone's wondering why NIO's vehicles aren't selling very well in Europe. NIO are probably wondering the same thing themselves. ET5, it just launched in Germany. It's an amazing car, definitely worth looking at, but that's only if you want a sedan, and they're not exactly cheap either. Now, NIO increased sales in March by 4% versus March of 2022. Not really a big difference. But unlike most China EV makers, NIO's sales fell versus their deliveries in February. They're down 15% versus February's 12,157, and March deliveries included 3,200 SUVs and 7,000 sedans. Bit worrying before them because obviously the Chinese car market is moving away from sedans towards SUVs. Q1 deliveries were 31,000, just above the low end for its forecast of 31,000 to 33,000 vehicles. Now, NIO shares have increased by an incredible 16% this week. I'm not sure why. Did some research. Still not sure why. Li Auto sells plug-in hybrids. They don't sell anything else. They plan on selling an EV in the future, but they don't at the moment. They delivered 20,823 vehicles, twice as many as NIO. Sales are up 89% versus 1 year earlier. But two more relevant stories for this channel, because we focus here on EVs, of course. Xpeng. Xpeng deliveries in March fell nearly 55% versus 1 year earlier to 7,000. That was a 16.5% gain versus February's 6,000. Sales grew. P7 sedan sales grew by 32% versus February to 3,000, but didn't give a breakdown between the P7 and the refreshed P7. We don't know where the sales are coming from, basically. We haven't seen that breakdown, but we do know Xpeng EVs are very, very cheap. Xpeng are making a loss of around about $15,000 per car. Yeah, they're bleeding as a company, and they're still investing a lot of money into things like flying cars, and a bit distracted at the moment, Xpeng. Hopefully they get back on track. Q1 deliveries were 18,000 vehicles at the low end of their guidance of 18,000 to 19,000. But some context here, Xpeng was doing really well in the first half of last year. Then they said they were going to hit 300,000 deliveries for 2022. They ended up not even hitting half of that. Things just sort of went bad. No one really knows what's happened to Xpeng. Now, here are the three companies that are the most interesting in my view, far more interesting in my opinion than either Xpeng or NIO, because they are doing things. They're shaking things up in a big way. GAC, they are kind of a legacy auto brand in China, but they have an EV-only brand called Aion, which is now actually a top 5 electric car manufacturer worldwide. They delivered 40,000 fully electric cars, and I'm not talking cheap budget cars here. I'm talking cars that compete with Tesla. They delivered 40,000 in the month of March. They're on track to likely deliver around 500,000 EVs this year, possibly more than any legacy automaker in the world. And most people haven't even heard of them. They're about to sell their EVs in numerous overseas markets, including Australia. Now, the incredible thing for GAC is not necessarily just their sales in March, but it's what they've come from. I mean, if you look at their sales in March of last year, they sold 20,000. They're at 40,000 for March of this year. The same goes for February. In February last year, they sold nearly 9,000 electric cars. But in February this year, it was 30,000. They had an amazing second half of last year, becoming one of the biggest EV manufacturers in the world. No one is talking about them. but they damn well should be. Neta sell budget EVs. Now, are they budget in the sense of the Wuling Hongguang Mini EV micro EVs? No, that's not their market. They're going after more like an affordable EV market, but they're proper sized cars. And they were crushing it last year between the month of June and November. They had an incredible 6-month period. December, something happened and sales collapsed. Then they had a pretty bad January. Sales were down to 6,000 versus nearly double that the previous year. They're sort of having a strange year so far. No one really knows what's going on with them. Neta delivered 10,000 vehicles in March, unchanged from 10,000 in February, and down 16% from the 12,000 vehicles they delivered in the same month last year. What about Leap Motor? Now, Leap Motor, the same period of time, between March of last year and September of last year, they dominated the market. They did really, really well compared to their previous years, where they nearly tripled sales for many of those months. This year, not so. Things have, been tough for them. Leap Motor delivered 6,000 vehicles in March, down 38.6% from 10,000 in the same month last year, but up 93% from February. Their February numbers were terrible at 3,000. In the first quarter, the company delivered 10,000 vehicles, a decrease of 51% from the same period last year and down 55% from the fourth quarter of 2022. Let's end with Zeekr. Zeekr are a brand of EVs you'll be able to buy pretty soon. They're relevant to you because they're part of the Geely group. Geely plan on selling Zeekr vehicles through Volvo Polestar dealerships. So if you live anywhere in the world where there's a Polestar Volvo dealership, you'll probably be able to get an EV made by Zeekr within the next few months, year, 2 years, 3 years, depending on what country you live in. But yes, they plan on becoming an international brand. They make some very good EVs too, which you definitely absolutely should consider. I would. Zeekr delivered 6,663 vehicles in March. That was an increase of 22% from February, but it was really nothing in comparison to what Zeekr delivered in the final 2 months of last year, when Zeekr delivered nearly 12,000 vehicles. Zeekr's deliveries in March were an increase of 271% from the 1,800 they sold in the same month last year, and up 22% from 5,500 in February, according to data released today. In the first quarter, Zeekr delivered 15,234 vehicles, up 84.86% from 8,241 in the same period last year, but down 53% from 32,500 in the fourth quarter of 2022. You can see here who the big winners are. It's very clear. GAC Aion, BYD, and Tesla. And I guess you could say Li Auto as well, except I don't see them as being a big part of the future because eventually people will stop buying plug-in hybrids, as they have in many countries in Europe. That's what I predict will happen though. I could be wrong. Let me know what your thoughts are in the comments, and thank you for watching. Bye-bye.